Hello everyone, it's Khaled. Welcome to today's daily pitch, 22nd of Jan 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, first we will start with the economic calendar and we will go over what was happening, a lot of geopolitical tensions and political news that was affecting the markets. We saw huge movements. We will cover all of these. Just let me have a quick sound check and then we can proceed with the economic calendar, see what do we have as a pre-planned economic events for today. Okay, so starting with the economic calendar for today, we had some economic data for the EUD traders. Unemployment rate came in better than expected at 4.1% versus the forecasted 4.4%. What will be more important, of course, during the day is during the New York session. We have the GDP for Q3, which is expected to increase from 3.8% to 4.3%. And in addition to that, what I think will be more important as well, which is the PCE. The PCE is the Fed's favorite inflation measure that they take into consideration in order to decide what they will make in the next steps regarding the interest rates, hold interest rates, increase interest rates. Of course, they will not increase it right now, but they will be between holding interest rates and cutting interest rates during this year. If you remember during our last webinar, if you joined, the Feds were expecting in the last dot plot to have one interest rate cut during 2026, while the markets were expecting two rate cuts. Of course, these percentages are subject to change regarding taking into consideration the economic data, the geopolitical situation, and everything. So these are the prices. The PCE is expected to be the year over year at 2.8%. Usually I look at this one, the PCE price index year over year. Of course, the monthly and the core plays an important role, but both of them, the core and the normal PCE, is expected to be at 4.8%. Let's move on to the charts and see what's going on. I will skip the XY because I will be analyzing it individually, but looking at the 10-year treasury yields, we can see that it's moving up. This is a signal that investors were selling the US bonds. There is an inverse correlation between the US bonds and the yield price. As for the VIX, after all the tension that took place during last week on the weekend and the past couple of days related to Greenland, we can see the VIX, or the fear index, just moved up and reached the 20. Yesterday there was some kind of de-escalation between the US and Europe. That's why we had this sharp drop. So looking at the dollar index, the dollar index on Friday, it reached this level, which is a technical level that we were marking it at the 99.2. And of course, whenever the markets opened on Monday, there was a sharp drop due to the political tensions between the US and Greenland. The US threatened to put 10% tariffs, and these tariffs will increase. And on the other hand, the European Union as well threatened to retaliate. So all these tensions and fear, especially from the tariffs once again, led to something known as Sell America. What does Sell America mean? It means that you see that the dollar index dropping. At the same time, if you look at the US equities, you will see them having a sharp drop. And in addition to that, you can see that the yields are moving up, so people are selling their bonds. This term is known as Sell America, when investors are getting out of anything related to the US in terms of dollar index, bonds, and equities. Of course, after yesterday, the escalation, we can see that all of these are rebounding. The US equities rebounded. The dollar index, if we have a look, it rebounded from here, and as well the yields here were on 4-hour 10-year treasury yields moved down, so investors went back to buying the bonds. So looking at the dollar index now, let's talk technically and have a look. It is very interesting to see with today's data, especially in case the PCE numbers are higher than expected. This could indicate that the Feds could keep interest rates higher for longer, and we could see the following movement once again. If price retested the 98.5, failed to break lower, I believe we could see the following price movement on the XY. Of course, after the XY, we will be covering silver and gold, which are like the most volatile and the most asset classes printing new all-time highs. But here, just let Let us do some analysis, because usually whenever you analyze the DXY, it can be reflected on a lot of currency pairs and commodities as well, depending on what you trade. So this is scenario number one. We will be marking it in green in case the PCE numbers were higher than expected. The next scenario, what if the PCE was lower than expected? This could indicate that the inflation is under control and we could be breaking lower. In this case, it's very important for me to see a break below the 98.298. In this case, I believe we could be retesting once again the 97.5 level. It's a very important level. Let's zoom out a little bit. We can see we had several rejections here, here, and here. And of course, depending on the economic data, in case we had additional sellers momentum, in case we broke lower, our next area of interest could be once again the 96. But let's take it level by level. I believe breaking below the 98, we could be visiting the 97.5. The final scenario for the PCE, what if the numbers were on forecast, nothing new to be given to the markets? In this case, I believe we will just be doing something like this with no clear direction, waiting for the next fundamental catalyst, either from the economic data or from the politics or geopolitical tensions. So these are the scenarios I will be looking on DXY. Let's move on right now on silver, see what is happening with silver. Looking at silver prices, of course, silver prices during the weekend, and because of the geopolitical tension, they gained some momentum. You can see that the market opened with a gap up, price broke higher, printed a new all-time high at approximately the 96. I'm going to be, well, I believe this level is still important, to be honest, but I'm going to put another level at the all-time highs at the 96 and see what are the possible scenarios. For me on silver, I will be looking for the following. I would like to see silver prices going back, retesting the 86. It is a very important technical level where you can see multiple rejections, but keep in mind that a $8 or $10 move, it is like a significant move on silver prices. I'm not saying it's not happening, it is happening, but it is significant move. That's why I will be marking a minor level here as well. Technically speaking, you can see that whenever price moved down, it was unable to close the gap that took place here. So let's zoom to the 30-minute time frame. Okay, the first scenario I would like to see on silver, in case we retested again the 90.8 or 91 and candles failed to break lower, I believe this could be a signal that we could see something like this. Fundamentally speaking, gold and silver are still bullish. That's fundamentally. Technically speaking, of course, for any asset class, after this huge upward trend, we must see some kind of profit taking and correction, and that's actually very healthy for any asset class. For me, I always prefer, and you know it, I believe, I always prefer to see some kind of pullback and then continuation, for example, buys, if that's the fundamental bias, or a move up or continuation sell, if that's the fundamental bias. So for me on silver, I will be looking for the following. In case we had an intraday candle closing below the 90.8, I see that this could be an indicator first to close the gap here that we had during the opening of the week, and my next target I will be looking at is the 86.5, which are these candle lows here. Reaching this level, in case the bearish momentum is not enough, I will be looking for the following price action taking place, a rejection here. Let's zoom in a little bit and have a look. If you see these candles, we had like some candles with lower wicks and the body closing. So this could indicate for us that the seller's momentum is not enough and buyers are jumping in once again. Very beautiful reactions took place from here. They broke higher, retested, printed a high, then retested the high. So it's a beautiful range to take advantage of. That's why for me, I will be having price alerts. One at the 91, second at the 86.5, or maybe I can put at the 87 to be honest, in order just to monitor the price action taking place. The final scenario for me on silver, what if candles start to reject here and move higher? I will be looking for this all-time high at the 95.9 or 96, we can call it, but I will be very cautious because personally would never like to buy any asset class whenever it's at its all-time high. I prefer, as I said, to see some kind of correction and then continuation with the fundamentals. So for me, these two areas of interest are very important. And like a little bit longer term is this area of interest, the 83. Sorry, the, yes, 83.5 as well. If you zoom out, you can see it's a very important area. It rejected once, twice, and here it became a support before printing a high. So I will be monitoring this area as well in case I see price reaching it, rejecting, making a consolidation, or any technical formation indicating reversal. I will be looking for the following price action. Finally, guys, before moving on to gold, if you like our content, don't forget to leave us a like, comment, and follow. In case you want us to analyze any currency pair, we can do it live together. And don't forget that today, after we analyze gold, we have a special guest with us that we will be discussing a very interesting and important topics together. Let's move on to gold and see what is going on. This was during our latest analysis. I wanted to see some retest of this gap. It didn't happen. And then we broke to a new all-time high supported by the events that took place with Greenland. So these analyses right now are not valid. We have new areas to mark. On gold yesterday, I had two entries. I will show them to you as well. Actually, they were limits and they were both triggered. One, it was a stop loss, and one, it was a TP. Let me share it with you. So after I saw price rejecting this level several times, to be honest, I had a limit at the 900, which was not activated, and I just removed it. But technically speaking, I was looking at two areas of interest. Number one, I had here one at the, yes, at the 25 approximately. I had the limit here at the 4,830 or 25, which got activated. It was a buy limit, and then directly my stop loss was hit. And I had another one which was at the 17. Let me see it on the lower time frame. On gold, I was looking on the lower time frame because due to all the volatility that was taking place, like a one candle, if you can see this one candle, a huge one candle drop, or one candle bullish 1 minute candle. So that's why I was looking at the lower time frame. So my first area, it was okay. My first zone was here. I had 100 pips with around 330 pips, something like this, sorry. And my next areas that I took was here. Yes, it was at the 17. This was activated. I had at the 17. Let's zoom in. Yeah, it was here, exactly here. I had the limit here at 17. The first one, it was directly hit, stop loss from the 35, 37. And the next one was activated at the 17 with a 100 pip stop loss. And I took around 250 pips out of it. And my next area was at the 50. It was the 57 was tapped, and then price moved up. It's very important to monitor the price action that took place yesterday on gold. We can see that after price started rejecting this level, and after the speech that the US president was talking about yesterday, we can see that there was some kind of de-escalation. The US president didn't say anything about military intervention or any war taking place, so he was more de-escalating. That's why, especially if you want to see the exact market reaction, just look, we are currently on the 1 minute candles. Just look at this huge drop from the 4,850. In a couple of minutes, we went down around $100 or 1,000 pips. That's why I said that on gold, you should be very cautious. I was looking at the lower time frame. Of course, I was doing my best not to get lost in the lower time frame noise, especially with the volume and volatility. Whenever you have a very strong volume and you're looking at the lower time frame here, it's very dangerous that you will get lost. You will start jumping into trades randomly. And speaking about the lower time frame, our next educational webinar next month will be how to enter on the lower time frame. We will share additional details for you. Now, looking at gold, my personal bias and the areas of interest I will be looking for. The first area of interest I will be looking for on gold is the following, the 4,850. It's an important level that yesterday we broke, rejected, we rejected another time as well. So I will be looking the following. In case price rejects again the 4,850, I will be looking for the following price action. And to be honest, for me, preferably, I would like to see price breaking and retesting the 880 once again. In case I see price rejecting, doing something like this, I will be looking for the following price action. As I said, because currently gold already priced in all the fundamentals, that is bullish. It doesn't mean that the trend is changed, but it means that after all this bullish momentum, we can see some additional correction. And zooming out a little bit, what if we retest this area again? Well, if I see price retesting the 4,700, I will be looking for the following price action, just candles breaking below these, reaching this level, failing to break lower, and I will be looking for something like this. So these, let's put them in red. So I have the first area, second area, and in case we broke lower, I will be monitoring here the 4,700. And even if during next week we have a deeper correction, the 4,630 is a very important level for me as well. I would like to see price testing it. So these are the areas of interest I will be looking on for gold. Sometimes none of them could be tapped. You will not have the alert triggered, or you open the charts, you can see that price is not even close to these areas, but I prefer to wait for these areas of interest before jumping into either buy or either sell. Okay guys, so that's it for my analysis for today. Right now we will go and we will have our guest to join us, Dillon. Just give me a second. Hello Dillon.
Hi Khaled, how are you doing today?
I'm good, and you?
I'm all good, thanks.
Just
Good
let,
afternoon,
excuse me,
everyone.
just let me for a moment check the sound. Okay, all good. You can proceed with what analysis you want to make, what do you want to show us. We are glad that to have you here on our live stream today.
Only a pleasure.
Thank you.
So, today I'll just be going over the market context and price behavior of the USD ZAR, which is the dollar against the South African rand. At the moment, what we're analyzing here is historical price behavior and market structure. We will not be looking at future price directions.
Mhm.
So as you can see on the USD ZAR, over the recent period, USD ZAR has displayed a sustained downward price movement. Now, this is observed through a sequence of lower highs and lower lows, which is common with the way we analyze and describe our trending behaviors. So it's important to note that trends describe what has already occurred, sorry, not what will happen next. Now, just to look at the key resistance areas on the USD ZAR. So one notable resistance reference area is located between the price of 16.45 and 1660. Now, historically, I mean back in 2022, price spent some time consolidating in this region before moving further lower, and multiple reactions occurred here. Now, a higher resistance reference zone, as you can see, is around 1690 to 1710. So this area aligns with previous swing highs and prior breakdown points. So these zones are simply historical references of where price was playing. Now, looking at the key support reference area. Now, on the downside, a short-term support reference area is visible around 1615 to 1620, as you can see around here. Now, below that, a broader support reference zone can be observed near 1590 and 16 Rand. Now, this region represents a psychological price area and an area with less recent historical trading activity. And this was back in 2022. So, just to also touch on some macro and fundamental considerations. Now, the USD ZAR is influenced by a combination of global and local macroeconomics. Now, from the US side, movements in the US dollar are often influenced by interest rates, expectations, inflation data, and Federal Reserve communications. Now, from the South African perspective, the rand is sensitive to domestic economic conditions. Now, fiscal stability, energy supply developments, and capital flows. Now, in addition, the global risk sentiment plays a significant role in this pair. Emerging market currencies, including the rand, tend to experience higher volatility during periods of global uncertainty. I think that can
Exactly. Speaking
conclude
about the
my
global
narrative.
uncertainty, like we saw the huge volatility that I was speaking about. I totally agree with you. There was a huge volatility in the next couple of days, and that was what we were talking as well, that the traders should be very careful sometimes. A 1 minute candle could drop hundreds of pips and even slip your stop loss due to the high volatility.
Exactly my point, as displayed on today's 4-hour candle.
Exactly. You wanted to tell us something else that was scheduled regarding
Um,
education?
no, that was from my side.
Okay. Well, thank you so much for joining. This was very nice breakdown. Speaking about the spare, the technicals, the fundamentals, breaking down really, it shows very clearly the market structure, printing lower lows and lower highs. We will see what will happen later. As for us, we covered as we said, I will be shifting to my screen right now. Yes, as for us, we covered the dollar index, the silver and gold. We will wait, of course, for today's economic data to see if it will give us any volume and volatility, one-sided direction. And that's it for our episode for today. Hopefully, everyone enjoyed it. Thank you so much for joining. I will give you like 1 minute in case you want to ask any questions. If you want us to analyze any currency pair, we can go over them together. Other than that, we will see you very soon and we will have additional analysis, and Dillon will be with us, of course, in the upcoming webinar and upcoming streams as well. Let's see Bitcoin during this time. 1 hour. Yeah, Bitcoin has been consolidating in this range and now slightly moving higher due to the, we can say, risk on environment. Things are back somehow to normal, but we will never know when the surprises will be. Investors today will be waiting, as I mentioned, for the PCE numbers. Let's wait and see. We will update you on our Telegram channel. Okay, so I see no questions. Thank you so much for joining, guys, and we will see you soon. Take care.